I'm Doug McKenzie, and welcome to another episode of the InsurTech Show. In this episode, we speak with AXA and Consiris to find out the pain points in the insurance industry today. I sat down with Anders Lacour from Banking Circle, who told me more about some of the research they've been conducting into the insurance industry. Now we're in the digital age of insurance. What does that mean for the insurers and the customers?
So I think the right way of looking at this digital age is to look at two or three dynamics within there and see what we can learn from the past and see how that could be applied into the future. And there are two or three changes coming together in the digital age. So one of them is around the Internet of Things and sensors generally. And if you go online and you look for consensus of opinion, you'll see that almost everything that could be sensed about our environment is now being sensed. So everything from how, when and where you drive to what the temperature in this room is, what the air quality is, and in commercial things, for example, where a vessel is and how it's performing, etc. So that data from those sensors is massive. If you look to pick up any stats at all, it's measured in tens or hundreds of billions of sensors. Effectively means that everything which was previously unknown can now become known. And that changes the basis for insurance. The downside of having all this data available is you've now got too much data. So you as an individual couldn't process the amount of data that's coming at the business. So we need technology to answer that question, to be able to extract meaning from those sources of data. That's one of the things that we do ourselves. Once I have meaning from it, now it's a case of, well, what does that mean for the insured? And again, we have some norms in the industry which we can start to unpick. So it's been normal that you might buy a policy that exists for 12 months. And we see this in your own car insurance policy or travel insurance policy. But why does it need to be 12 months? Because I don't travel continuously through the year. In fact, if I look at my policy, it has limits to how often I can travel. So wouldn't it be great if I could just sense that you were abroad and just offer travel insurance? So your risk as an individual changes through the year and through what you do. So wouldn't it be great if my commercial risk, so if I have a vessel, if my risk changes on the vessel, so does my policy. I might go into a high-risk area and come out of it. So wouldn't it be great if that could be sensed and adopted automatically? And the third area of digitization is how that business is placed. And today in the market, it's primarily done on a manual basis. We sit here overlooking the Lloyd's office and the Lloyd's building, and the way that business is written today is it's very paper-based. People walk in with bundles of paper and then negotiate a deal. And if I take those three things, that model can't persist either. Because if I'm going to have real-time insurance, for example, entering into a war zone, I can't have a broker just stood outside Lloyd's going, right, quickly running, go, go round and get that business stamped. That's not going to work, but I can do it electronically. So this sort of confluence of technologies, we put it like the flux capacitor, is actually more accurate pricing gives me the ability to write some very narrow policies which I can now get placed in near real time. And again, we've seen that whole change happen in other industries.
I think the thing that has changed from a customer perspective most recently around digital trends and digital technologies within the insurance industry is how customers' expectations have evolved, that they are expecting something more tailored and personalised and relevant to them. We see that building from what's happened in other sectors and other industries over the past 10, 15 years, starting with, yes, social media and then probably kind of retailing. And that's already moved into an element of financial services around banking and things becoming more tailored and relevant and personalised. The insurance industry and AXA are trying to move ourselves in that direction as well. And in particular about how we can offer services and benefits around our core insurance protection to make us more relevant and for a customer to feel genuinely more personally treated in terms of how they interact with us.
Can you tell me a bit more about the background to Banking Circle?
The Banking Circle was founded 5 years ago with the aim to provide financial infrastructure to businesses in the financial industry. We've focused on financial tech businesses in the payment space primarily over the first couple of years, while later on moving into banks. And we provide the bank account infrastructure for any of these businesses, enabling them to service their client base in the corporate space.
So why is Banking Circle looking to finally work in the insurance industry?
I think many of the challenges that we identified a couple of years ago in the payment industry or in terms of the banks, meaning the ability to do highly automated reconciliation and payment flows, you could also apply that towards the insurance industry. In the insurance industry, we've seen the evolution of the insurtech industry that is trying to solve many of these challenges. And again, we are in this space to actually provide the financial infrastructure for these businesses to operate. Especially if you look into the digitization within the insurance industry, they, in my opinion, will face many of the same challenges as the banks in terms of compliance, automation. And we have that set of tools. And we're obviously keen to apply this towards that industry because we think they can solve a lot of challenges, similar challenges as we have sorted out for the financial tech industry, payment industry, and the banks.
So can you tell me what are some of the findings from your research so far?
Yes, I think most of our research runs into three categories of findings, challenges for the insurance industry. First of all, you've got compliance in the digital age, in terms of how to actually manage the fact that many of the insurance policies are now being done online. The second one is the need for reconciliation within the insurance businesses and the ability to do this without too much manual involvement. The third one is fast payouts of claims. So in the respect that if a customer has a claim and that claim is approved by the insurance business, the customer can actually receive the funds within 1 day or same day. And I think these are the three main categories that our research shows that the industry has today.
Next up, we look at one of the largest pain points they found in their research, the quick reconciliation of payments.
The quick processing and reconciliation of payments is a vital thing for our customers and obviously a significant component of what is the insurance operating model, both taking payments from clients and then obviously issuing payments to clients in the event of a claim. The digital trends and new technologies over the past 10 or 15 years have already changed that significantly for insurance companies where, typically our payments to customers would have been checks. I think that's genuinely the exception. Literally handfuls of those happen a year as opposed to what it would have been previously. Most are electronic payments that happen now. But I think there's more that we need to do as customer expectations have evolved, particularly around the receipt of payment side from customers. So the use of PayPal or Apple Pay or Google Pay and those sorts of things. We need to make sure that our customer experiences evolve to keep up with the customer expectations. And in many situations still, the insurance industry actually needs to up its game in pursuit of that. So meeting those customer expectations by continuing to stay at the leading edge of normal in terms of technological advances around payments is yes, critical.
And in terms of obviously the big data that comes with the digital innovations, does this mean that sometimes this quick payment methods and this quick move to agile services is sometimes hard to implement?
I think that is a genuine risk. I often look at it though that actually it shouldn't be a barrier. That should actually be a stimulus. That should kind of again create a drive and a focus to be able to deliver those customer benefits and those better customer outcomes of improved speed of payment and reconciliation and those sorts of things. The industry has to take it with that mindset, that approach about it being a stimulus rather than necessarily a barrier. Otherwise, then it could become a threat to us. If we don't adapt and meet those customer expectations, then there could be a part of the value chain and the customer relationship that we may not own in the future. So yeah, I see it as a positive rather than necessarily a barrier.
The quick reconciliation of payments is going to become fundamental to the industry. The most recent stats I heard is that in the offline model, to the non-digital model, it can take 6 months for money to move from the customer to the insurer, or from the insurer back to the customer in the event of a claim. In the digital world, that can be done and should be done instantaneously. And when we look at how companies differentiate their proposition to customers, it can be as simple as, if you can do it quicker, I'm prepared to pay more for it. If I go online and look for parallels to that, there is a company called Uswitch published a study last year where they said that actually we give you all the prices for your moving to a different utility, and these are the cheapest ones, but there are cheaper ones if you want to do your work yourself, and 80% of the people said actually I'll just go with the ones that you can do for me. So easy wins. And I think that a lot of the insurance companies are waking up to the fact that actually if I can offer a superior service, it doesn't actually need to be the cheapest, it just needs to be the easiest one. So if I know that I'm going to be able to get quick claims paid without anyone haggling or disputing it, then that offers value to me in what's an incredibly busy lifestyle. So again, the personal lines, we see that changing, and again in commercial lines, if there's been an incident and the money's owed, then the quicker that's paid is better, and I think people can offer those products into the market that will be differentiated.
What part of the insurance industry do you think Banking Circle is really going to help the insurers the most?
I think we will try to apply the toolbox that we've had the most success with in the payment industry and towards the banks, and that is particular within outgoing payments, incoming payments, and reconciliation. If you look at the insurance industry, I think there is, at least the research we've conducted, has shown that when you collect the payments, you have direct debits that are failing, you have a lot of manual power spent on reconciling the payments, and that's exactly where we will try to come in and where we think our product can actually make a lot of value.
We learned how some of the payment processing issues are actually affecting the insurer's ability to succeed. So Anders Lacour broke down how using Banking Circle's technology can actually help them with this.
I think the research identified 2 additional challenges. One is collection of the insurance premiums, where a more automated setup would be at least on the wish list for many of the insurance businesses. The other side is errors when doing payment of insurance premiums from the consumers. If they get something wrong in the unique ID that they have to state when they set up the direct debit or the payment, it will typically fail, and then it will require a lot of manual involvement in the insurance business. With the setup that we've got, the product we've got, that's actually exactly the pain point we've sorted out for many businesses in the payment space and for banks. So with our product, this will typically come in a version where you can eliminate that friction.
How do you believe Banking Circle can tackle some of these problems?
I think with the virtual IBAN setup that's been a huge success in the payment industry, the InsurTech business will be able to deliver fast and smooth reconciliation towards the insurance businesses. The InsurTech will be able to deliver a much higher straight-through processing rate of the payment, given that you typically not have the failing direct debit or all the errors from someone making a pay-in. Third of all, they'll probably be able to do collections and payout much faster and in more countries than they can do today. So these are the 3 main pain points that we aim to enable the InsurTech industry to deliver to the insurance businesses, like we have over the last couple of years enabled a lot of business in the payment space to deliver services towards their client base.
We then looked at collaboration within the insurance industry and how some of the insurers are actively looking at collaborating with the InsurTechs to improve their digital offerings. So as an InsurTech, do you look to collaborate with some of the insurers?
Well, so as an InsurTech, one of the areas that we woke up to really early was that you need to collaborate with the industry. It's a very, very wide and complex value chain that's existed for many decades. And rather than going into an industry, and we see this with some of our competitors going and say, we know best, we could do this better than you can. Our view is that actually you need to bring the market participants along with you. And we equate this very much to going into a town centre and saying, we think we should reverse the one-way system. Is that if you wanted to do that, you couldn't do it on your own. You'd need to agree that it needed to be done. You'd need to get all the road signs changed, and you can't do it in increments. You can't say, I'm going to reverse this bit, and then this bit, and then this bit, and then I'll come back in a few weeks and change the signs, then I'll come back afterwards and change the road markings. It needs to be done in a coordinated fashion. So what we've seen as being a real advantage for us, and we've seen other InsurTechs that are succeeding do this, is to work with the value chain as a whole and understand how they can cooperate. So we've invested a lot of time in getting brokers on board with what the digitization of the industry means, getting the insurers on board with it, getting the consultants on board. So we have a very active partnership with Ernst & Young, for example, and again working with the reinsurance and the capital providers to really understand, in a digital environment, how does everybody make money? How can we collectively remove administrative costs from the whole value chain, and how everybody can win? And my advice to any InsurTech would be to do that. My advice to ourselves and to our own team is, let's build a community around what we do and insert ourselves into other communities and get that sort of group win, because then we win as well.
Are AXA actively looking to partner with other insurtechs or fintechs in this post-technology boom?
Absolutely. I mean, that is a critical part of AXA's approach to this globally, either through investment with insurtech, digital kind of startup companies who are pioneering some of these techniques and looking to realize the potential that new digital technology could create for customer propositions in the insurance industry. So either looking to invest in them, but actually equally also looking to work with them locally across the world within the AXA operating companies that exist across the world. Here in the UK, we've been constantly kind of on the lookout for the past 3 to 5 years about how we could work with certain partnerships in this space. And genuinely, there are people within the AXA insurance business whose job it is, and real job it is to stay kind of fully up to date and abreast and aware of the myriad of insurtech kind of startups and opportunities that may exist. Actually, more of the problem is choosing which ones are the most appropriate for us to kind of partner with, or where we see the most opportunity. But that will be, and that already is, as I said, an established part of what we're kind of looking to do, both here in the UK and globally. And I think that will only grow over the course of the next 5 years.
So speaking on that, what do you look for when it comes to partnering with these insurtechs?
I think there are 3 core things really that we look for when selecting a partner to kind of investigate with from the insurtech space. One is about having clarity of a customer proposition and its relevance to our customers. Be that our personal customers, personal lines customers, that home, motor and travel insurance, or our commercial customers, so large companies. We believe strongly that there needs to be an immediate need and relevance to some of the existing challenges or opportunities that we face with our customers. Secondly, we're looking for a kind of a group of people who, quite frankly, are inspiring around the belief of what it is that they're trying to deliver as a startup or insurtech kind of organisation, and a group of people who've got a real kind of focus and energy around pursuit of that. The final thing is actually it's as important from our perspective to have a group of people that have the focus and the energy that I was outlining before. It's as important as that the insurtechs themselves have a real clarity and understanding about what partnering with the likes of AXA or another kind of big insurance company enables for them. It may sound peculiar, but actually there are many of these insurtech kind of companies and organisations that they see it as part of their kind of natural evolution to partner with large kind of incumbent firms without necessarily understanding the real opportunity or accelerator that would give themselves as a company. So with those kind of 3 things, that certainly narrows down the field of opportunity and enables us to focus on developing partnerships and arrangements with the ones where we think there's going to be most kind of win-win from our perspective.
I think there are 3 main benefits by using our product versus what's available in today's market. First of all, the insurtech business will be able to deliver a solution with both their own tech layer and reconciliation module that makes it quite easy and frictionless to do the reconciliation for the insurance business. Second of all, they'll be able to deliver probably much faster pay-ins and payouts. And third of all, they could eliminate the need for direct debits in the space, and again, increase the level of automated transactions handled by an insurance business.
That's it from us. Thanks for watching, and be sure to join us on the next episode of the InsurTech Show.